Now, I have a feeling this video is going to make me fairly unpopular, but it's been bugging me for a while and I kind of have to get this just off my chest. Now, I've been investing in the stock market for nearly 15 years and doing it as a full-time job for nearly 10 years now, and in all that time, I've never seen the herd mentality destroy the collective returns like I am currently. What I'm talking about is this mindless, herd-like mentality. Investors becoming cultist almost over certain fund managers or stock pickers and just blindly copying them. It's almost become a bit of a meme, but it almost is getting to the point of becoming a reasonable investment strategy to do exactly the opposite. Right, the first, easiest way to demonstrate this point is with Cathie Wood and ARK. Each day when I used to log into YouTube, I'd see 50% of the videos on my homepage relating to Cathie Wood and ARK. Either videos encouraging the replication of her trades, singing her praises as the newest stock market genius, or even I saw a terrifying number of videos suggesting that Warren Buffett was past it, washed up and done. Now, I'm all for new funds with disruptive strategies, new approaches and all of that, but these videos suggesting Warren Buffett was an awful investor were somewhat cringeworthy. I, for ages, have been saying about ARK that it's not suited to be a listed fund. It should be a closed-end fund where investors can't withdraw capital and it doesn't have the same regulatory disclosure requirements. As a private entity, it could deliver on its strategy without the concern of investor redemptions and could follow a similar model to that of VC funds. Anyway, it got to the point where the level of capital she had flowing into her fund was getting crazy and unsustainable. In one of my live video calls in the Patreon group, in February 2021, I suggested how shorting ARK could be a good strategy to generate returns. Yes, very high risk at the time given the level of support and sentiment around ARK at the time, but anyone who did this at this point in time would be sitting on a pretty impressive return. Anyway, back to the specific point of Cathie Wood and ARK. As the poster child of the aggressive growth stock strategy, with the concern of inflation on the horizon and a decrease in sentiment for growth stocks, a sector rotation has put her and her funds in a more challenging position. From refusing capital previously as a result of being too popular, she's now facing significant drawdowns from her investors. She's no longer everyone's favourite stock picker, and already investors have turned their back on her. For all of you in the "oh, Buffett is useless" camp, let me leave you with this. This chart is basically showing the relative performance of Cathie Wood and ARK and Warren Buffett over the same period of time. Now, this isn't the point of this video, so I'll come back to it in another one, but mark my words, Cathie Wood and ARK will be back again and will once again be everyone's favourite funds at some point in the future. Not just yet, there's some more pain to come still, but just wait and see, and I'll make a specific video covering that and why I believe that's the case. Now, I'm all for the argument that, oh, this is just a one-off, but it's not. Now it's Nancy Pelosi and other senators and their trading activities. Loads of creators on YouTube and TikTok are showing the most recent investments made by senators and other people with political influence. Now, for those not familiar with this, anyone who is in a position of political influence has to publicly disclose their positions. They have a 45-day period from making the investment to disclose it, although some do miss this deadline and face a financial penalty. Now, this is just where it seems even more crazy to me. Firstly, these senators are not trading on privileged information. As easy as it is to say that they are, just because of some impressive returns they've generated, they're not. If they were and they were trading on inside information, this would be highly illegal and they would face the full force of the law regardless of who they were. And believe me, I think the SEC would welcome the chance to make an example of some people. The bit which does confuse me even more, however, is that often these trades are filed so long after they've happened. At least when copying ARK, investors were able to action the same position the next day, as ARK actually post their positions daily. Here, you're at least 45 days behind. Now, I feel like I'm referring to this cliche more than ever currently, but if investors are following the mantra, then copying the majority and following everyone else is the opposite of being fearful when others are greedy. It's not sustainable, and you're harming your long-term returns by doing this. When Nancy Pelosi falls out of favour, who's next? Graham Stephan, Meet Kevin, Jeremy from Financial Education? It's just madness. Stop being a sheep, as you will never make sustainable long-term returns in the stock market by doing this. Over the last week in the market, there's been an increasing fear caused by the anticipation of inflation and Fed rate hikes. My personal belief, as I have discussed in some other videos, is that we will continue to see red markets for some time. However, and not wanting to repeat the same cliche, but one should be greedy when the market is fearful. When we see the market fall further, which I do believe will happen, this is when, if you have conviction in certain specific stocks, you should be increasing your position and exposure. My strategy here is to wait for the first rate hike and see how this occurs and see what happens to the market, and if we see any stabilisation or it bottoming out. As soon as we have that growth scare in the form of demand decreasing, which always happens as it has done during every period of increased inflation historically, the rate hike narrative and the inflation narrative will wane and capital will flow back into tech and growth stocks. I've covered this in much more detail in another specific video, so if you're interested in that, then definitely check it out. Do you want to be the investor that is chasing that flow of capital back into growth stocks and missing that initial 15, maybe more % rally? Or are you actually going to take matters into your own hands? Stop being a sheep, understand what you're doing, why you're doing it, and become a better investor. Now, a slight digression here, but I'm also planning to make another separate video on why I will always be long tech. The exponential age, the network effects, and a whole host of other things mean that this growth will always be deliverable in a way that many older investors have never experienced before, where it isn't possible in older markets, say consumer products or consumer staples, for example. Just for the absolute avoidance of doubt here, being long the tech sector now does not mean that I'm still buying and increasing my positions. As I have said loads before, at the risk of sounding like a broken record, I do think there's still more red to come, but I will be increasing my positions in tech stocks, which I have the greatest conviction in once I believe the market has bottomed out. Anyway, that's it for today's video. Thanks a lot for watching. I hope you enjoyed it. If you did, please smash the like button, subscribe if you aren't already, and check out the Patreon for the private Discord and other investing related content. As always, please let me know your thoughts and comments in the comment section below. I love hearing all the different opinions and perspectives, so please get involved. Thanks again for watching, and I'll see you in another video.